Today, Bitcoin battles to hold the $90,000 mark, and Owen Lau of Clear Street discusses what's next for Bullish after the crypto platform reported better than expected revenue in the third quarter. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies in the red across the board this morning as uncertainty continues to hamper crypto markets. As of noon Eastern, Bitcoin sank nearly 4% under the $90,000 mark, at one point hitting as low as $89,393. Meanwhile, Ether dropped nearly 6.5%, dipping below $3,000. And Solana, it fell more than 5.5% and was trading at $133.28. Okay, let's talk about the top stories. Crypto exchange Kraken is making its long-awaited move to go public. The company just announced that it submitted a confidential filing with the SEC for an initial public offering. Kraken says it has yet to determine how many shares it plans to offer or at what price range. This is just the latest crypto company with plans to go public under a friendlier regulatory environment. Last week, Grayscale Investments, the company famous for the Bitcoin Trust turned ETF, GBTC, also filed an S1 with the Commission. Some companies that have gone public this year include crypto exchange Bullish and stablecoin issuer Circle. Kraken was sued under previous SEC leadership, accused of operating as an unregistered securities exchange, but that case was formally dropped back in March. All right, let's talk about Bullish for our main story. The company reported third quarter earnings this morning, including revenue that beat expectations and $18.5 million in net income compared to a net loss a year ago. Bullish CEO Tom Farley was on Squawk on the Street this morning to talk about the quarter, and here's what he had to say.
We actually own around about 24,000, 25,000 Bitcoin, so we're just down a lot of dough, and we're very consistent with our investors. We're not a hedge fund. We don't make trades. We have this pile of 25,000 Bitcoin, and we have for many, many years. But on the other hand, when markets are volatile, as you know, that's when people like to interact and exchange risk on an exchange. So we have very robust volumes, especially here in November, towards the latter half of October, November, really the highest we've seen in over a year.
I spoke with Owen Lau, managing director and senior analyst at Clear Street. The firm has a buy rating on shares of Bullish with a price target of $57. Lau joined me from the Clear Street Disruptive Tech Summit in Palm Beach, Florida, to discuss the company's quarter and what could be ahead for the stock. So Clear Street initiated coverage of Bullish back in October with a hold rating, then upgraded that to buy earlier this month, while also lowering your price target at the same time. Now we've gotten earnings from the company in Q3, which showed a surge in revenue. Give me your reaction to this quarter and how Clear Street is thinking about this stock right now.
So first of all, thank you for having me. I think the stock overreacted today. I heard some comments that the guy, in terms of the SS&O in the fourth quarter, you look at the midpoint, it was flat from the third quarter. So some people talk about, hey, the number should have been much higher. And then the second thing is the crypto market as a whole, it's a little bit under pressure over the past 2 months or so. But all in, I still feel like this is an overreaction. It could become a good buying opportunity.
Now, to your point, the stock is down about 7% this morning as we're speaking. Where do you think that pressure is coming from? This outsized reaction to the print, or is it just this wider crypto sell-off that we're looking at?
I think it's both. So first of all, if you look at the crypto prices, it's down a little bit. And it's a continuation of what we have seen over the past 2 months or so. And then going back to your point about the print, this is like one of the things people focus on. It's the SS&O, or the equity service revenue. Again, it's flat from 3Q to 4Q. But I do think this is an overreaction. And if you look at longer term going to the first quarter, assuming everything else stay the same, I do believe that line item could become much better. And in fact, going into the fourth quarter, not even in 2026, we do believe it could be another record quarter for Bullish in 4Q25.
Now, in terms of risks to the stock, I'm wondering if the rise of some of these alternative crypto investments like ETFs and DATs are a long-term risk for Bullish as it tries to garner institutional adoption. Do these present any form of risk in your view?
I actually think the rise of these stats is an indication that we see massive adoption continue from the TradFi companies. When we went to many conferences over the past few months, we actually see more TradFi companies are embracing crypto in the lending part, also on the payments part. So the tokenization theme has been going up, not down. What that means is it actually helped the liquidity services for Bullish going forward because they can charge fees for visibility and also for trading pairs. So to me, net, this is a net positive for Bullish longer term.
Now, also from a competition standpoint, how much room do you see for Bullish to gain market share in this current environment? Because you've got giants like Coinbase and Robinhood making really strong plays for institutional adoption. We also just found out today that Kraken has filed to go public as well. So where does Bullish stand in terms of meeting that competition?
Yeah, that's an important point because based on our tracking, Bullish spot trading market share was about 2.1% in the third quarter. In October, it went up to 3%. In November, we only have like half the month. It actually went up further to 4%. So what we are seeing is Bullish has been taking market shares in the trading space at the expense of some other smaller exchanges globally. So I do see after the IPO, the platform has more credibility. At the same time, this is one of the most compliant platforms in the world. So the regulatory tailwinds will support the long-term growth for Bullish.
Now, in terms of bright spots for Bullish, we've got a much friendlier regulatory environment for crypto here in the U.S. Are there any specific provisions or regulatory proposals that you see moving their way through Washington that would be a boon for the company?
Yeah, so we just get past the Genius Act. We expect the Clarity Act, or maybe the so-called the market structure bill being developed by the Senate. Some committees like the Act Committee and also the Banking Committee will become the next key catalyst for Bullish. Now, we don't know the exact timing. Some people talk about by the end of this year, but we are more conservative. Maybe earlier next year, we may see a market structure bill getting passed. That could be a key catalyst for altcoins that will also benefit Bullish.
Also, in terms of crypto prices themselves, we've seen this sharp decline in recent weeks for Bitcoin and other digital assets, but we haven't seen a major shakeup in institutional adoption of crypto. So once we get past this pullback, is there a potential opportunity for Bullish or its competitors to see a surge in trading volume once buyers return to the market?
Yeah, so one thing I want to clarify the point is Bullish actually make money when the market goes down. They also make money when the markets go up. So because they charge the trading revenue, they charge a trading spread. This volatility has actually been helping Bullish revenue. So that's why, go back to my previous point, we may see another record quarter for Bullish in the fourth quarter. So again, like going back to your point, I do see like this pullback in the crypto prices. It's helpful for trading volume when we see the return, and hopefully we'll see also the return for the stock on Bullish in the near term.
I just completely fail to see how a digital asset exchange like Bullish or Coinbase is not suffering from the rise of the DAT trade, because so much momentum and so many inflows into names like Bitmine Immersion, which is an Ether proxy, or Strategy, which is of course a Bitcoin proxy. So how does that not hurt a centralized exchange?
So because trading is just one part of the revenue stream. And when we see more adoption and Bitmine and some other names you just mentioned, it actually helps more capital coming into this space. So to me, it actually...
But I want to cut you off there, because coming into the space, it's coming into a publicly traded equity. And it's not as though Bitmine Immersion is adding one for one the amount of money that's being bought in stock in kind on its balance sheet in Ether.
Yeah, but at the same time, the base is so low that we didn't have a lot of capital compared to last year, right? So when we see like the Bitmine, and actually I would argue that there are more resources from the buy side dedicated to the debt space, more capital being allocated to the crypto space to make the allocation. So maybe last year, funds may only allocate less than 1%, but because of the debts, because of the regulatory tailwind, funds are going to allocate more, maybe 2%, 3%, and 5%. That's why the pie has been expanding, not hurting the crypto exchanges. And go back to the trading volume in terms of the dollar amount, it has been going up, not down. So those are the evidence that I see. This adoption has been helping these exchanges, at least so far.
I should mention that Crypto World will be at the Disruptive Tech Conference, and we'll bring you the latest this week. That's all for Crypto World today. We're back again tomorrow, though, and we'll see you then.